Welcome to the Flow Tracy Monday Audio Commentary. This is Owen Tracy recording, and it is 3:42 p.m. That is Central Time, and today is January 29th. I thought I'd kick off with gold, where the price is steadying from above the 2,000 level. This continues to look like a consolidation in the region of the upper side of the 3-year range, and potentially a little first step above it, but we won't really have confirmation of that until we start to see more dynamic moves on the upside. Then Bitcoin was also stronger today, up over $1,000. So that's starting to look increasingly like a failed downside break below the 40,000 level. Then there's a lot of speculation going on right now in China around the liquidation of China Evergrande. And obviously, if you're a foreign holder of US dollar denominated debt and all of the assets are in mainland China, you probably haven't got much chance of getting it back. But there's obviously going to be questions around that and just how the Chinese government is going to solve that issue. And of course, that did weigh on the stock market, but not in an especially dynamic manner. And the lows from last week continue to hold. And provided that remains the case, then the potential for a recovery remains, I think, fairly convincing. It's very oversold in the short term, but I don't think anyone is really looking at China as anything other than a trading vehicle rather than an investment vehicle these days. I've been saying that for years, but I think now the rest of the market is starting to catch up. Then India's market was in positive territory, and what I think is rather interesting is that Dangote Cement in Nigeria is on fire. It's been up in an exceptionally dynamic manner over the last 3 weeks, following the beginning of trading for Dangote Refinery, and that's the biggest refinery in Africa now, and the Global X ETF isn't coming even remotely close to tracking the performance of the Nigerian market. So that I think is also rather interesting, that there are lots of ETFs out there, and whatever their name says, it doesn't necessarily mean that they offer real world access to the kinds of small markets that they deem to. It's not quite the same when the QQQ says it tracks the NASDAQ 100. I think people understand that that's fairly close. Or I think a lot of people are going to be looking now at the Bitcoin ETFs and wondering, are they going to track the Bitcoin price, and how closely or effectively will they be able to do that, not only in a rising market, but in a falling market. But then you have an ETF like the Global X Nigeria, where it is miles behind tracking the performance of the MSCI Nigeria ETF, or index, I should say. So certainly there's plenty to talk about in here.